Q2FY22 earnings conference call of Caplin Point Laboratories Limited, hosted by Monarch Networth Capital. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Vinit Gala from Monarch Networth Capital. Thank you, and over to you, sir.
Thanks, Jacob. Hello, everyone. On behalf of Monarch Networth Capital, I would like to thank the management of Caplin Point Labs for giving us this opportunity to host the Q2 and H1 FY22 earnings conference call. Today, we have with us the senior management team from Caplin Point Labs, including Mr. C.C. Parthipan, Chairman of the company, Dr. Sridhar Ganesan, Managing Director, Mr. Vivek Parthiban, Chief Operating Officer, Mr. B. Muralidharan, Chief Financial Officer, and Mr. M. Satyanarayan, Deputy CFO. I would now like to hand over the call to the management team for the initial comments. Thank you, and over to you, sir.
Thank you, Vinny. Good evening, everyone. We are pleased to welcome you to our earnings call for Q2 and H1 FY22. Please note that a copy of our disclosures is available on the investor section of our website as well as the stock exchanges. And please do note that anything said on this call which reflects our outlook towards the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. With that, I would like to hand over the floor to our chairman for his opening statement, please.
Good evening. Welcome all to our earnings call. My colleagues will talk on the numbers and ratios, hence I would like to touch base on the following. Initially, products, markets, and model. We have been registering differentiated products in our existing market in the following areas, namely CNS and CVS. Second, oncological products. Third, specialty injectables for hospital division. We already identified the marketing team from India, which will take care of the brand marketing in the areas of CNS, CVS, Onco, and specialty injectables. Some of the employees have already reached there, and others are waiting for the visas. The important point here is that the number of competitors for this type of products and brand marketing only from the multinational companies and from one or two local companies. This would also create a separate revenue stream in 1 or 2 years in the existing markets to our company. We are also registering more generic products in the existing markets, which again strengthens our presence, and customers feel happy to note that we have different buckets of products that created a huge basket available to them. On the other side, we are registering products in mid-sized markets such as Chile, Peru, Colombia, and Costa Rica. We have already started exporting small consignments, and this would increase in the due course. We have plans to register our products in Brazil, and we already obtained the online approval from Anvisa Brazil. The next big opportunity for Caplin Point is Mexico because of the size of the market and its proximity to the Central American countries where we are a strong player now. We received one registration from Mexico. We will be able to increase the registration and also start good business once the travel restrictions are lifted. Further, it will not be out of place to mention about Venezuela. We received a transfer of $4.5 million in the last 3 months. We also exported $3 million worth of goods in the last 3 months. Since the crude price has gone up, we sincerely foresee larger opportunities from Venezuela. We have also started registering our products to more than 10 countries in Asia and Africa, where our presence is not there currently. We further identified CIS as a greater opportunity for injectables, both general injectables and oncology. We have shortlisted 2 candidates who have very good exposure in CIS markets. The CEO of the company will talk of our activities in CSL and US market. Now, let me look at the people and projects. We have been recruiting people with hands-on experience from bigger companies. Our attractive visa helps us to attract and retain our talent pool, which is very important at this juncture. We witness a change in the mindset and skill set of our old and new of our company, which is very important also for the growth of our company. Further, we are creating a separate team to train the new entrants for necessary skill sets that will also help the company to grow in future. Coming to projects, there is an ongoing second phase in CSL, which again the COO will brief it. We also have 4 projects, 2 are API and 2 are for the formulation. One API is for the US FDA project and the other one for the oncological product. And we already bought land of 19 acres in an industrial estate where we are planning to start the construction for both the API projects. And the formulation project, we call it as Caplin Onco, in an industrial estate called Kakulur, where we bought a building in 120,000 square feet, and we are going to start Caplin Onco tablets to start with, and the machineries for which have already been placed, and we are expecting the machineries from Germany by March or April of 2022. Since there is more space in the form of a second phase in the existing building, we have plans to either go for a OSD project or a penum injection, especially the ETA penum, where there is a huge opportunity in the international market. However, we found a recent opportunity in the form of acquiring a OSD plant with UK MHRA, and the discussions are on. We have very narrowly missed an opportunity of acquiring a US FDA API plant, which the COO will brief it. Further, we also have some challenges such as ocean freight and the transit time to our destinations. The ocean freight has increased 4 times. It used to be in the region of $3,000 and $4,000, which has gone to $16,000 to $20,000. The transit time used to be 30 to 45 days, which has gone up to 3 to 4 months. Restrictions on travel due to COVID pandemic has also disturbed to certain extent expansion of the markets. However, our existing business has not been impacted in a big way, except the delay in commissioning the second injectable line in Caplin Sterile, and also an increased inventory in transit. Finally, you are aware that we have enough cash reserves. We also have maximum products registered in ROW markets and regulated markets such as US and other places. Although it is not huge in numbers, we already started our presence in the regulated markets. We further have enough products in pipeline and WIP stages in some of the regulated markets like US, Brazil, and Mexico. We also have the right people to manage our facilities and marketing. And our current projects are in various stages of completion. Hence, we are confident of creating many milestones in the years to come. Today, Caplin is a metaphorical butterfly. Flaps its wings, fly to larger markets from smaller markets, and the larger markets are going to be in South and North America. Thank you. Thank you very much.
Thank you, Chairman. Now I'd like to give a little update on Caplin Sterile, which is our regulated market injectable facility. We've been making fairly good progress in the last few months with more product launches and also completing more exhibit batches now that we have 2 fully functional manufacturing lines and also a third ophthalmic line. In total, we have about 17 approvals out of 20 that has been filed. Of the 17, 12 are in Caplin Sterile's name and 5 are under partner's name. And out of the 17, only 2 more products are to be launched, which will happen sometime by January and February of next year. All of the launched products, we have seen high single digits to low double digits kind of market share, and we constantly work with our partners to improve this market share to sort of 15, 16%, which is a very good space to be because many of these are simple solution products. We're in the process of doing exhibit batches, etc., for the more complex products which fall under the emulsion and suspension category. That will happen in the next 12 odd months. When we are talking about the partners, we've been working with the large companies in the US in the past. Now we are slowly evolving our business model to work with a distribution kind of a concept where we are working with a company that is very well established in terms of injectable sales in the US. They know the right kind of channels, they know the right buying groups, etc. And this will be a precursor for our entry into the US, which most likely will happen by 2023. We are also in the process of, in fact, we've already started exporting products to non-US markets from this site, with the first exports happening to Mexico and UAE in the past 3 months. And we expect this business to slowly grow as well. And apart from US, we have already filed 3 products in Canada in the last few months, and 3 more will be filed in the next 1 or 2 quarters. So we expect there to be some traction before end of 2022 when it comes to Canada. In terms of a front end, as I was saying, 2023, we feel that there should be close to 25 ANDAs under our belt, with a few more under the pipeline which have been filed as well. So we think that would be a good time for us to launch our own label in the US, and by which time we also would understand what are the tier 2, tier 3 kind of buyers that we should be targeting rather than going after very large buying groups which might not happen in the initial period. I'll also give you a little background into our expansion plans. We are in the process of putting together 3 mixed bag lines. This is a very niche area. I believe in India only 3-4 people are in this concept, and we would like to be one of them. And we feel that this could be completed by January of 2022, and we can start taking trial batches the next month onwards. We already have completed development of 7 products in the 3 mixed bag line. We are also working on the much larger capex operation of phase 2 of our injectable plant, which will house 2 high-speed vial lines, which we already placed with Bosch in Germany, 1 refill syringe line with Sterile in Italy, and a lyophilizer from Teflon. All of these will start to come through before end of next year. We hope to have all of the machines and lines qualified and ready for commercials by early 2023. Once this is completed, we would be in a position to take up much more quantum of CMO projects in addition to all of the own projects that we will be doing. And we are also putting together the right infrastructure to take complex products such as amphotericin, liposome, propofol, enoxaparin, etc. That will be global projects as well, because we also want to reduce our dependence on one single market, which even though our maximum focus is towards the US, we also want to make sure that there are additional lines of revenue that happen in the coming few years. Finally, I would also like to touch upon the automation processes that we've been taking on, especially in terms of testing, manufacturing, documentary control, compliance, all of this. We want to make sure that we have maximum level of automation at the plant, to the extent where we have a target within the next few years to become as close to paperless as possible. We are heading in the right direction. This is an initiative that is very much appreciated by the regulators as well, and we want to be ahead of the curve when it comes to that. That's most of the developments over the last few months. I will just hand over the floor to Mr. Muralidharan, our CFO, for a quick review of the numbers for this quarter, please.
Good afternoon. This is Muralidharan. Welcome you once again for this conference call. So the numbers are available with you for the couple of hours. The numbers, let me
briefly touch upon. On all parameters, all ratios, the company has done well. Be it the growth in sales, which is 20%, or the gross margin, or EBITDA, all the ratios are better compared to the previous quarter and the previous year as well. The chairman has mentioned about the challenges in terms of transit, freight costs, and other things. Fortunately, we have been able to pass on maximum portion of the increased cost to the customers, such that our contribution margins have not suffered. And the inventory increase in the warehouses has helped us to realize them in quick sales and also convert them into cash. The profit margins have not suffered much because of the increase in freight and this one, but there are increases in OpEx because of this freight cost increase. For certain customers, you have to absorb the freight. From CIF to FOB, you have converted those orders. That is increasing. Even though the cost absolute terms have gone up, as a percentage of sales, it has remained more or less same. Only 0.5% increase in the fixed overheads has helped us retain the margins and improve the profitability percentages. With this, I would invite the investors to participate, and then we are glad to answer any questions.
Thank you, sir. And I think we can open the floor for questions now, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question.
Okay, thank you.
Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all participants, you may press star 1 to ask a question. The first question is from the line of Pratik from Nomura. Please go ahead.
Hello. Thank you for the opportunity, sir. One thing that I observed was your gross margin improved QOQ and YOY. Like QOQ also it improved by about 380 basis points. Any particular reason that you would like to point out for the gross margin increase? And is this sustainable? Like what should be the sustainable gross margin number that we should look at?
I think we'll request the CFO to talk on this first, and then I will take it.
Thank you for the question. Actually, our chairman is directly monitoring the products which are to be sold, high profit margin products. And then we are discretionary in taking over the orders. And also, the product mix has contributed to a higher margin in the current quarter.
Yeah, I would like to add actually a few lines here. As you know, there are two ways actually to improve your profit margins. One is increase actually the price at which you sell in the market. Other one is reduce the cost. Since we have been, that we have been working from home only except for the last 2 months that we are coming to the office, it becomes easier for me to spend more time on both. One actually on the markets through Zoom, and the other one actually talking with our own people how exactly to reduce the cost. Both have been happening. And earlier, I now used to talk on a day-to-day basis with my marketing team, which really has happened actually during this COVID disruption. As CFO put it, since I was able to involve in the whole process of actually marketing, starting from actually production to marketing, we were in a position to achieve better gross margins.
Okay, so sir, what kind of numbers should we look at going forward for the gross margin? Any guidelines?
Like, we are very sure that we will be able to maintain the current one. And going forward, I want to be actually one issue which is very, very important. This is happening in the current market. If I have to expand, as you know well, actually, the base effect also has come close beyond the 1,000 crore. And we are sure of doing good business in some of the best markets of South America. But again, if we have to create a differentiated business model, and we need to make a trip, which means the travel restrictions has to be lifted. Otherwise, we are sure of maintaining the numbers which you have given now, which we have achieved. If you are in a position to actually travel and work in the market, you are sure of achieving better results.
Okay. And then how much of our raw material is imported? Does the import depend on China, if you have that?
Yeah. I would like to tell, because most of the time we used to tell this one. Our business model is totally different from China. When most of the people are importing the raw materials from China, we are exporting formulation from China to Latin America, as we have a front end presence there. So we have not been importing much compared to other actually peers. The exact quantum I don't remember. Our main business is more of formulation export from China to South America.
Okay, thank you. And then what is the component of US sales for this quarter? I mean,
I would request the COO actually to talk on that one.
The split right now is 90% ROW and 10% US. It hasn't changed too much from last quarter. We see this trend continuing towards the end of the year as well.
Okay. Thank you. I'll join back.
Thank you very much.
Thank you. The next question is from the line of Ashish Agarwal from Pareto Capital. Please go ahead.
Thank you. Good evening, sir. So I had a question with respect to the emergency sale that we had recorded in the LATAM markets in the last 2 quarters. Now, I noticed that in the press release you've mentioned that those emergency sales have been completed. So do you see your top line getting impacted on account of that in the Q3? And how much was the contribution in Q2 for those sales?
To be honest with you, the quantum is not very high. And the advantage that created because of this emergency sale is people have, especially the MOH in all these countries, have tested our product and found out about the quality of the product. Although it will take a little time for us to register products in Mexico and Brazil, this is something acted in favor of us to understand about the company and its products. Then this is not going to impact in a big way because the quantum is very low, as I told you. For second, in course of speech, I mentioned about actually the sudden development which has been taking place in Venezuela. We used to export in the region of like $300,000 to $400,000 to Venezuela, which has increased to 1.5 million every month, 1.5 million every month. And that too, the money is coming upfront. Even now, like 1.5 million is in the form of advance. So if something happens in one market, there is another market to compensate actually that one. So we are not worried about the current actually growth. If you have to increase the growth in many folds, then of course, the opening up the borders of the countries, travel restrictions have to be lifted. That's it.
Sure, thank you. Just you mentioned about Venezuela suddenly, having seen an exponential growth. Could you just dwell into the reasons for that, and do you anticipate that kind of traction to improve going?
I hope you are aware the crude prices have gone up, and I think it stands somewhere at $85.
Right.
What was the crude price at one point of time? If the crude price go up, and the best countries to be benefited are the one actually which produces oil or crude. Venezuela is one of the countries that produces maximum crude actually in the whole of Western Hemisphere. That really helps. In fact, there was a minus 224% growth in the past, and now they predict plus 2% for the next year.
Wonderful. And you mentioned your margins obviously will maintain it, possibly expand it going from here. And if I just understand it right, I mean, the next year you have many plants and products coming on stream. So, I mean, can we anticipate a very robust revenue growth coming in next year as well?
I want to be very realistic because it's true that we are coming up with a lot of plans, but as you know well, the plans are long term. There is nothing in the form of we can complete the projects immediately and then complete the registrations also very fast. As you know well, the entry barriers in the regulated markets is quite high. We are 100% sure that we are going to grow well maybe 2-3 years from now in a big way. But the next 2 to 3 years, we will have to concentrate more on the ROW market. The advantage is probably our Onco tablets will become operational 1 year from now. And there are markets where we have already completed the registrations of Onco products by using our company as a loan license in another company. That will help, as I told in course of my speech, that would help us actually to establish our brand presence in Central America. The same way, we have been manufacturing CNS and CVS products now. We have been registering also these differentiated CNS and CVS products. Again, we will start brand marketing for that particular area. Injectable is one area which has become our major portfolio of products, both in terms of regulated markets, also for the ROW. We have around 80 to 90 products, and out of which 60-70 products have been registered in 8 to 10 countries in Latin America. So we'll start a hospital division to take care of actually that particular domain. So we foresee a good future, and I don't want to commit that the projects will be completed and we will be in a position to do it in a big way because of certain reasons where none of us are actually clear about this pandemic to endemic, or will there be any other thing which would create issues. And we also don't know when exactly the shipments that are going to actually various countries that created actually the transit time and the ocean freight in a differentiated way. So when the external factors are not in a position to understand, when we are not in a position to understand it, the variables gets increased. So I don't want to give you a commitment. I want to be very realistic. We will do well, and I don't want to give you something, in the form of like we will do extraordinarily well. We will definitely do well.
Got it. Thanks. I'll just put in one last question, sir. You have a very strong, robust cash balance of over 560 crores, and you've also been generating strong cash flows, and your capex is much lesser than your current cash flows are. I mean, current cash balance. So, I mean, do you have any plans in terms of, some special dividend or some buyback? I mean, what is the thought process on those lines?
Yeah, in fact, to be honest with you, it's true that we are open to any meaningful acquisitions. That we also tried once when it was about to actually get completed, and to their luck, and they got one product registered, and we were about to sign the definitive agreement. They backed out. This is an API facility, US FDA facility by an American company. Now there is one more opportunity of a UK mature factory. We are in discussion with them. We are always open for this type of meaningful acquisitions. That's true. Second, coming to dividend, we'll have to discuss with our board of directors and take a decision. Third, all these projects which was taken out, it's a question of time before we complete everything. Some may actually takes 1.5 years, some may takes 1 year. After that, the registration starts. So these are all in right direction. It's something similar to what the big boys have done it. We are trying to emulate actually their standards here, be it in the form of product, be it in the form of actually facility. We are just following it up what the big companies have done, what they are currently doing in all these countries where they are making it big. We may be in the periphery now. We are sure that we will also get into the core in the short to medium time.
Got it. Sure. Thank you so much. Wish you all the best, and wish you a very happy Diwali to you and your team.
Thank you very much, and wish you the same. Thank you. Thank you so much.
Thank you so much.
Thank you. Ladies and gentlemen, you may press star 1 to ask a question. The next question is from the line of Vedika Singh from Monarch Networth Capital. Please go ahead.
Good evening, sir.
Good evening, madam.
Sir, can you articulate on the thought process on the CRO business? What are the inroads you are getting from the client side, and what is the outlook on this business?
Okay. Thank you very much. I hope you are aware that recently we received the US FDA approval without any observation after they completed the online inspection and on-spot inspection. And we are expecting the EAR from US FDA. And we got it actually by using a third party who has filed a dossier in US. And our main purpose of creating the CRO is not to go for actually other companies' work. We have enough products in the pipeline to do the BBA studies for our own products, mostly in mid-sized markets and the bigger markets in the long run. Immediately, we will think of registering maximum products in Chile, Colombia, and Costa Rica, where we know we have very good opportunities to sell the products at a higher cost, although the markets are not as big as US and Brazil and Mexico. So this is more of like 70-80% we will use it for our own products. Maybe 15-20% when we have a capacity, we will use it for other companies too. Is it okay, madam?
Yes, sir. Okay, sir. I had another question, sir. Could you please throw some light on what kind of margins can we make on this business?
What kind of margins we can make on?
The CRO business.
CRO business, as I told you, margins, we'll have to talk of margins if I do it completely based on other people's job work. When we do it actually for our own company, it enhances the value to our products. If I'm selling a product, even in a smaller geography, say, with a profit of 30-40%, that will increase by 15-20% because of the bioequivalence and bioavailability. And the doctor or actually the chemist who look at our products, the moment they understand that it has been actually this has been completed. This in fact completed the B studies means which is equivalent to the innovator's molecule. So that will enhance the selling capacity of the product.
Okay, sir. Sir, can you please throw some more light on how the business is shaping for Caplin Sterile beyond US, and also by when can we reach the peak potential revenues post the phase 2 capex completion?
I will ask the COO to give a reply on that.
Yeah. So today, 99% of our revenues is from US, and in fact, we are very much focused towards the US. As you all know, over 50% of the entire world's healthcare spend happens in that one country. So obviously, our primary focus is on the US. But at the same time, many of the products that we are getting into now also has a very decent market outside of the US, especially Latin America, Europe, Southeast Asia, etc. So we will be looking at global dossier launches only going forward. While I don't have a set number in place on what would be split between US and non-US sales, a general thumb rule from predecessor companies, ones that have done well in the past, especially in injectables, this looks to be around the 80-20 kind of a split. When it comes to peak potential, I would like to describe it in two manners. Number one is with the pipeline of over 45-50 ANDAs that we have in our overall development portfolio, we would certainly require most of this capex expansion that we are planning on. But that might happen, probably in about 4 years, 5 years from now. In the meantime, being under the same FEI number, which is basically the registration number in the US, any new line that we add is automatically approved because it comes under the same quality management system. So for the short to mid-term, we will be approaching our existing partners and potentially new partners for contract manufacturing business as well in the US, which would be a good generator of cash flow also until our products start to take up most of our capacities online. So that is the idea going forward. And also when it comes to injectables and sterile products, we will be very differentiated compared to other peers because we will have products in vials, pre-filled syringes, pre-mixed bags, lyophilized vials, and ophthalmic. So Apart from Ampules, which doesn't really have too much of a market in the regulated space, I would say we would pretty much be having the entire basket of offerings when it comes to hospital-related products.
Okay, sir. Thank you so much, sir. That's it.
Thank you very much, madam.
Happy
Thank you.
Thank you.
Thank you. A reminder to all participants, you may enter star one to ask a question. The next question is from the line of Nikhil from Galaxy International. Please go ahead.
Yeah, thank you. Thank you for taking my question. So I have a couple of questions. So one is related to Caplin Steriles. So I wanted to understand how much equity stake do we hold in Caplin Steriles? So is it 99.9 or is it lower than that?
So Caplin Point, the parent company, holds 75% stake. I mean, right now it might look as 99.99, but for all practical purposes, you can assume that eventually the investment partner will hold 25% because it's CCPS. So at the time of exit, it will get converted into a 25% stake for the partner. But as it stands right now with CCPS, so it doesn't really show up. But you can assume that it's a 75-25 kind of breakup.
Okay, thanks. Second point on this one is this Caplin Steriles actually made a loss after deducting all the R&D expenses and all for last year, right? So FY21 we had a loss. So when do we expect that Caplin Steriles will be able to turn a profit? Let's say based on the current plan, given that we are in a huge investment phase. So will it be a little more time or maybe in FY22 or 23 would be in profit? Any views?
So we want to take it one step at a time. The next target for us is to make sure that we achieve cash flow break even. That we feel could happen within next year itself. But when it comes to overall profitability, we are probably another 2 years away. And that is specifically to do with the number of filings that we do because we charge off all of our R&D expenses and stuff. This constantly, when it comes to a pure P&L point of view, it becomes a drag on our bottom line. But this is an industry where it's a long gestation period. And once our right kind of product mix and once our slightly more complex products start to get approved, then there's no looking back for us. And today,
let me add a few words actually here. It may look like a big challenge. It's true, it's a challenge. But again, if you can handle this challenge effectively, this is going to open up a great opportunity. The reason being, if you look at this space, there are very few people of our size who are into actually injectables, especially to USA with the ANDAs of our own. Remaining 2-3 companies which have got the US FDA approval, it's more of actually OEM. They are totally depending on contract manufacturing. Today, injectable facility for US market is something like actually an infrastructure project. We have to invest a lot, wait for a long time. What is important actually is the wherewithal. Today we are not borrowing money from any institution, and we are not leveraging the debt. Everything has come from the internal accruals. And of course, the 25% which they were invested, they have been after us, and then eventually they gave us a very good actually deal in the form of for a pre-revenue facility, they valued close to 900 crore, and we have also accepted it. So we are very confident that there's going to be a great opportunity. Maybe it's a question of few years from now. Yes, please. Is there anything you want to ask on this?
No, I'm pretty clear. So I'm also going to go about the US entire business, the way the products are moving actually. So and the partnerships that you have. So it's definitely great. So just maybe a little more question. So we see, so in the press release it was mentioned that we have 45 ANDAs that are under development, right? So I just wanted to understand, let's say the breakup of those ANDAs, because I also saw that 5 of those ANDAs that we are looking to file are in the ophthalmic range. But I don't understand. I don't think that we have a manufacturing facility for ophthalmic products. So first question is that from an ophthalmic product perspective, would we be actually doing contract, getting the products contract manufactured, or is there any plan for doing it in-house? And second thing is that on an overall 45 ANDA basis, so if you can have some breakup, let's say simple products, complex, injectables, so that we're talking about, you are also doing some liposomal or amphotericin and some of these other complex products. So what would be the kind of ratio or mix of those? Because the development timeline, complexity, and the investments is also very, very significantly different, as is the returns.
Yeah. So we actually do have a ophthalmic line in the same facility where our injections are being made. It is actually called as line 3, and we've had it for the last two odd years, more than 2 years actually. Now we've already filed the ANDA from this line. We were supposed to get an FDA audit sometime early last year, but because of COVID, that hasn't happened. But we are expecting that sometime in the near future. So yes, we don't do any. We don't get our products contract manufactured outside. Everything is done in-house. That would answer your first question. In terms of the complexity of products, see, as we speak today, we have close to 24, 25 products that are ready for scale-up and exhibit. Now, because we only have two vial lines, we need to do the right kind of balance between launching our existing products, continue to focus on our revenues and cash flow, while at the same time also make sure that we have a healthy pipeline of products coming in for the next year and the year after that. So, to answer your question, I would say that probably 3 out of every 10 products that we do are complex in nature. But they might be complex by way of manufacturing, development, by way of scarcity of API, etc. So, in many areas you could have complexities in terms of US products. When it comes to ophthalmics, our overall pipeline out of the 45, around 9 products are in ophthalmic space. So you could say that the injectables obviously our higher area of focus. But because ophthalmics are also manufactured in a similar manner, because they're all sterile liquids as well, it would be useful to have another manufacturing line in the same space as well.
Right, definitely. So thanks for that. So just a follow up on that. So out of these 45 ANDAs that are under development, so are we saying that almost everything is injectable plus ophthalmic, or is there some oral capsules, IR, ER, XR kind of things, or that we are not doing?
So this plant we only do sterile products, so it is all injectables and ophthalmics. When it comes to our new expansion projects, that is our oncology space and stuff, we are getting into oral solid dosages in the first phase, and then oncology injectables in the second phase.
Right, and you are also setting up the PFS as well as the line for that, as the Mr. Chairman was talking about.
All of that falls under Caplin Sterile. Yeah.
Right. Okay. So besides this, if I can take the liberty and maybe ask 1 or 2 questions on Caplin.
Please go ahead.
Right. Sir, I just wanted to understand, right? So we are insourcing a lot of formulations from China, right, and actually exporting it to Latin America through our own distribution channel. Have you faced any problems in terms of supplies from China, given that there are issues right now? While I understand that formulation may not be, let's say, impacted to that extent, so it is still your views and inputs on that. So that is question 1. Yeah.
So far, so good, except the issues that we face in India, in the form of ocean freight and the transit time. Is one of the same. Today, the freights have actually become very, very high. It's not only confined only to India, it's also happening in China. And the second issue is timelines. I would say, in fact, it's lesser from China to South America. The third issue, they are now talking of power cut and other things. But in fact, our office people have been telling us that it's not going to impact us in a big way, because we are not manufacturing with smaller companies. The products that is being manufactured from the bigger companies, they always manufacture the products for 1 year at a time. In fact, this was being taken care of actually by Mr. Vivek at one point of time. He'll be able to throw some light on that. Vivek, go ahead and tell them how exactly the structure operates in China.
Yeah. So I think, as is always the case, when it comes to pharma and food, these industries are given first preference when it comes to allocation of power. So most of our suppliers, they are top 3, top 5 companies in China, so they've been able to manage their resources very well. So as Chairman was saying, so far so good. We've not seen any sort of slowdown or delays or anything like that. But the more important point is we at all points during the year have 4 to 5 months, sometimes even 6 months worth of ready stock at China. Now, because most of the products that we do, almost all the products that we do have 36 months shelf life, this is something that we can afford to have. And the more interesting part of this is we don't pay a single dollar as an advance to any of these stocks. So our clock starts ticking only after we ship the goods out, and then we pay them 60 days to 80 days from the date of the shipment. So because we plan so much in advance, we've not really faced too much of an issue in terms of non-availability or scarcity of product or anything like that. But we watch this space very, very closely. Obviously, there is no such thing as, we know everything about the markets or and all that. But having our direct presence at the, country definitely throws a bit more light compared to what we read and hear about in the media and stuff every day. So we are very careful. We watch closely. We interact with our partners on a almost daily basis to make sure that we're not left suffering at any point.
And I would like to add one more thing here. The transit time, as I told you before, which has been actually increased from 30 to 40 days to 3 months. Today, what is considered as actually an issue, which will become a great opportunity maybe after 1 or 2 years, when the export of vaccines gets reduced. We used to have $7 to $8 million in the form of actually, stocks in transit. Today it has increased to 22 million, which means what will happen, suppose if we get actually an additional cash flow of some 200 crore for the current year, when the issues in the form of actually, this transit time which is happening because of the export of vaccine, when that gets reduced, then automatically the lead time will get reduced, which means the opportunity for having another 125 crore for that particular year as a cash increase is a real opportunity. This for sure. As these stocks which are next to the market, next to the customers, will get actually encashed very fast. That's how last year we made more money compared to the previous years. Last year, if you look at our balance sheet, we had an excess cash of 300 crore. This kind of a situation will happen one day when this lead time gets compressed. Yes, please.
Yeah, sure, sir. Sure, I understand that. So just another follow-up question on the China thing. So when we are doing let's say importing from the Chinese formulation companies, so do we have a backup from the Indian companies also, given that India generally also has a lot of good manufacturing capability and formulations?
Can you please come again, sir? I'm sorry, I am unable to hear it properly. Can you?
Sir, what I was asking was that let's say we are importing from China, from the Chinese top players. Do we have a backup supplier from India for most of our big formulations that we are exporting?
Okay. See, this is definitely, we always keep a backup. But again, I would like to convey one important thing. Today, 70% of the raw materials are imported to India from China. So, which means anything that we are sure that we are all actually interested in getting into key starting material, intermediate, and API. That's the only way we can go for an import substitution, which cannot happen overnight. And in our case, I would say this is much actually better than an importer of raw materials, because this is export of products from China to South America is like an export of any other person from import of any other person from South America. So that's not going to be impacted. Definitely, even if that happens, we are sure we'll be in a position to do it in India. And I am sure this is not going to happen just like that, because the dependence of raw material, especially the key starting material and intermediate, is quite high in the area of pharmaceuticals in India. And the whole world depends on the key starting material, whether we like it or not. That's the fact of life. So it's better to be an exporter of formulation from China to South America, which will not impact because even if there is some issue between India and China, it's not going to impact actually the export of products from China to South America.
Thank you. Mr. Nikhil, may we request that you return to the question queue for follow-up question, as there are several participants waiting for their turn. The next question is from the line of Harshal Patil from Sharekhan. Please go ahead.
Good evening, sir. Thanks for the opportunity. Sir, just have some couple of questions. Basically, with respect to first the capex spends, sir, if you could just share what is it that we've lined up for FY22 and 23?
As I told you before, the one project which will become operational in 22-23 is our Onco tablets.
Right.
And initially, that will be in a position to export to the existing markets where we have completed the registration. And the rest of the products is more of actually a work in progress. And most of the machineries for these projects, have to come from Germany and Italy. And the lead time for importing this machinery itself is between 15 to 18 months. Sometimes, very narrow, 1 or 2 machines can come in 12 to 15 months. So that means we don't foresee any project other than this Onco tablets and all to go on stream in 22, 21, 22, 23.
Okay.
Okay. Then there is one opportunity. If you acquire a company in the form of inorganic growth, then there is an opportunity for us to get into some regulated markets.
Okay. So the Onco tablets, what can be the investments? If you can just give some flavor of what.
Yeah. See, the Onco tablets, the facility where we are going to house Onco tablet is a place where we will also install injectable machinery in the second phase. As a whole, it would cost us 100 crore, but the first phase will be in the region of 60 to 65 crore.
Okay, got that, sir. And yeah, okay. Sir, my next question basically was, sir, in the Q1 call, we had mentioned of some guidances and some growth outlook, wherein we said that we would be looking at doubling some revenues from the LATAM over the next 5 years, and also look to touch about $100 million of revenue from US over the next 5 years. So, sir, considering this developments and changes, do we stick to this guidance now as well, or any changes?
Yes, we are very sure about it. 5 years from now or 6 years from now, we are sure of doubling our sales, which is definitely a possibility.
Okay, got that, sir. And lastly, sir, with the Mexico and Brazil thing that you said, of course, subject to removal of travel restrictions. But would it be safe to assume that FY23 we could look at some bit of nominal revenues flowing in from Mexico, and post that maybe sometime in 24 from Brazil?
This is the only issue. Like when I say, even if they lift the travel restrictions, we must be in a position to work in the market. Right. One is reaching the country, other one is entering the market. By reaching the country, we don't get business. Only when we work in the market, we'll be in a position to create a market differentiation. Today, what's happening? All the big companies, they go for the creamy layer. In that sense, because of their extensive reach in the form of starting from key starting material actually to the front end presence, they are able to control actually the prices, and they are in a position to get into the tenders where it's not easy for us to compete. At this juncture, we are also trying to create everything the way in which actually the big boys have done it. But it will definitely take at least 3-4 years for us to reach to that level. Until that period, we have to concentrate more on the private market. When we go for the private market again, there we have to look at the tier 2 and tier 3 markets where the profitability will be more, although the volumes are lesser. which means one of us actually have to go and work in the market. These are things which has to be created by us because we only know how we have created the differentiation in South American markets, although the markets are smaller. At the end of the day, Mexico is very close to Central America. It's just 1 hour drive by 1 hour actually by flight from Guatemala to Mexico. I've been to Mexico several times, and the only issue today is the COVID pandemic, which of course I'm not in a position to commit to know when exactly we'll be able to do something in that particular market. We are positive. It's not going to go like this forever. The pandemic has become endemic, and it's a question of maybe 1 year. After that, we will be in a position to work in the market also without any hassles.
Got it.
Thank you, sir.
So, that's it from my side, sir. Thank you.
Thank you very much, sir. Thank you.
Thank you. The next question is from the line of Preetham Moitra, individual investor. Please go ahead.
Am I audible? Hello?
Your line is unmuted.
Yes, sir.
Please go ahead.
Please.
Yeah. I had just one question. At the current portfolio and the current markets which Caplin Point is, how many years does Caplin Point sees a so-called saturation point?
You mean you want us to know? You want us to tell us about the saturation point in the current markets where we are
Current market as well as the portfolios. Suppose that you are not expanding to any new market and you don't want to, let's say, innovate new products. So how long would something like that last?
What Vivekananda said is expansion is life, contraction is death. We don't actually believe in saturation. When you go to a market, there are so many ways actually to do business, as you know well. And first, the priority is to get into actually markets where we will make sustainable actually revenues, and that comes in the form of generic business. If you look at actually US to the smaller markets, it is the generic that really sells a lot. But the only difference is generic in ROW, you will see Tom, Dick and Harry, whereas in US you cannot see small player or a mid-sized companies to enter into US, that too into injectables. So the current markets is true, the generic also, as we increase the number of generics and more of a complex and specialized product, there is a space. One is a generic, then branded generic, then brand marketing, and it becomes easy for us to get into brand marketing without even having deeper pockets because of the fact the geography is smaller. If you take oncologist in a market like the biggest market and the biggest revenue earner for Caplin Point is Guatemala. The population is 15 to 16 million. The number of oncologists maximum is 50 to 55. To meet this 50 to 55 oncologists, you just need one representative. And that one medical representative who take us from India, it becomes all the more easier because people who have already met the oncologist in India, what they need is only one interpreter who has to work with them. In the same way, CNS and CVS products, as I told you, currently CNS products and CVS products, there is an increase. The maximum amount of diseases that surfaces in the world, first it is cancer patients, followed by CNS and CVS, these two areas. And CNS and CVS again is a specialized area, and the number of doctors are few and far between in the geographies where we are today. So we are opening up that area. We are already in regulated markets with injectables, and we also have our presence in ROW injectables also. All put together, that itself actually creates a basket of more than 100 products. So when you go for actually 50 to 100 products in these markets, the moment we complete the registration of 50, 60 injectables, that opens up an avenue of reaching to the hospitals, private hospitals and clinics who dispense the injectables. So like this, what is important at the end of the day is the model that we create. There is nothing in the form of saturation. I think saturation, I don't know, it's very difficult for me to understand the concept of saturation. Maybe there will be a saturation, but that time when a product gets saturated, you have to move to the next product or the next level of marketing. That's what I feel. If you want to ask any other questions, please ask me, sir.
One last question, sir. You said that the shipping costs have gone up by like 4 times. So how much of your net sales does it eat up exactly?
It doesn't see. This is the advantage that we have today. If I go and actually appoint an importer like most of the companies of our size, then all these problems persist and they exist also. The reason is my importer will say that, so and so company from India and so and so company from China has come here and told us actually that we'll sell the product at a lesser rate. But when we have become our own importers, which means, we are controlling an end-to-end business model in the countries where we are present today. And there is an increase. We have an opportunity in the form of actually present next to the customer with a huge range of products. When we increase the product's price, they will not actually question us because any product which is going to be available in that part of the world has to be increased, or either you will increase the product and survive, or you will actually vanish from the market because you cannot sell at lower prices. If you sell at a lower price at a time when your actually cost at which you manage the company is increased, how is it possible for it to survive? So what is important again is the model actually which helps you, not the product here, especially in generics.
Thank you.
Thank you very much.
As there are no further questions from the participants, I now hand over the conference to Mr. Vivek Pratibhan from Caplin Point Laboratories for closing remarks.
Thank you, Vineet, and thanks to all that have participated in the earnings call. And we do hope that we stay in touch for future interactions as well. And we wish you all a very happy and prosperous Diwali and a safe Diwali.
Thank you. Thank you so much, and wish you all actually a safe and healthy Diwali. Thank you. Thank you very much.
Thank you. On behalf of Monarch Network, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.